for a way to make money and or have the money they have build wealth for them. And obviously on this call, we talk all the time about how to use real estate to do that. One of the people I listen to from time to time is Trevor Thompson. He is a real estate investment specialist in passive income and helping people who have money to invest get passive returns. And in particular, he is with massive.capital, not massivecapital.com, but massive.capital. Trevor, great to have you on the call today.
I'm so glad to be here. Thanks for having me.
I see you regularly on a couple different podcasts, and my goal to, or my search to learn more about information, I see you regularly in different places. And so glad to catch you there. Give me a little background though in your real estate investing. How did you get into real estate in the first place?
Yeah, so sadly I waited too long. So I always give the advice, don't wait to buy real estate and wait. So I didn't start till my late 50s. And I was always interested in it, but same as everyone else, kind of afraid of toilets, tenants, and trash. And then I always had the excuse, no time, no money. And I worked for a company that did get bought out. So I got a bit of a payday. So the no money excuse went away. I paid a fortune in income taxes and went, I got to figure out real estate and start creating passive income. And that was about 5 years ago. And since then, I've been a very active passive investor, and then now switching to the active side.
Well, hold it. Active passive investor. What does that mean?
Well, passive investor means basically that you invest in somebody else's deal. And as an active investor, you're a sponsor or a general partner or a syndicator, whatever you want to call them, of a deal with partners. And so, which means you do a lot of the work on the deal. You're not just giving your money and letting someone else take care of it.
So full disclosure, I mean, I'm a real estate broker. That's how I make my income and make more than I live on to invest the difference. Personally, I invest in stocks, bonds, and real estate. My business life is kind of crazy. I'm a real estate broker in probate real estate. So I like my investments to be a little more quiet and reliable and turn it over to professionals. And so personally, I'm a passive investor in real estate exclusively. I don't like, you said toilets, tenants, and trash. Don't deal with any of those. And so I'm always looking for people like Trevor who are syndicators who have projects that they're looking for people to invest in passively. That's to say it's the only way to make money. I also think if your goal is to do it actively, you can learn from people who are doing that and be more effective. So let's talk first for the person who's looking to, who like you has money to invest, but never bought any real estate. I come across people like that regularly. This particular podcast is the official podcast for the LA County Real Estate Investors Club. And we get people who, like you, are in corporate America, change jobs, get a payout, get a buyout. Maybe they start a business and sell it and have a lump of cash. They want to start in real estate, but often, as I'm sure you find this, they're scared to make that first investment. How do you help people off the ledge or the diving board to jump in the pool to make that first passive investment?
So the most important thing is to get some form of education. And education can be listening to podcasts. It can be joining somebody's mentoring program. It can be buying books. There's a few really good books on the topic. So you need to make sure that you do your education on what is it first. Then the next and more important part of education is finding somebody you know, like, and trust. And that's very important because these are the people that are going to take your money and they're responsible to deploy your money and provide returns for their investors. So you really want to make sure that you check out learn about it first, and then the who. I call it the jockey. The jockey is the person who's going to win the race. And then the horse can be the asset class of whatever large number of things you can invest in. And then the track is often your area. So for example, I don't invest in California. Sorry for you Californians, but I invest in Texas, Arizona, and the Carolinas right now because they're pro-business, landlord-friendly states.
Well, no offense taken. I live in California and I don't invest in California for the same reason. So, and also to diversify, to be honest, I have a home here and I have a business here. And so it's only reasonable to diversify my investments elsewhere as well. So I think it's not only just a practical strategy from a political climate point of view or business climate point of view, but from a diversification. So you said something in the beginning, and I want to keep people in on this. I find there's two types of if I just want to categorize, when I search as an investor to put my money in investment, I see really two different groups. There's people who want to charge money because they're really in the business of selling education that might not ever lead to real investment. And there's people who are in the investment business who realize in order to gain people who know, like, and trust them, invest with them, they have to invest in education and give information mostly for free. So you mentioned, for example, education. Tell me a little bit about where, if you were looking at somebody who's brand new to get started, where would you direct them specifically? What podcasts would you recommend? What books would you recommend? I suspect, I don't believe you have a $10,000 training course that you're going to charge people to learn. So where would you recommend people? I mean, I met you on my quest to find podcasts about people, to meet you and several others. But where would you direct people? What podcasts, one or two, and then maybe a book or two?
Yeah, so the book I recommend everybody for starting out, it's a book called Passive Investing. It's written by a guy named James Kamasami, and it's a best-selling book, and it talks all about being a passive investor, what you need to look for, what you're doing. It's an excellent book, and I highly recommend it. And I do have a YouTube channel, and on my channel, I do recommend a whole bunch of books, and that's one of the ones that I recommend. And then I suggest that you start listening to various podcasts. Now, I do a lot of podcasts. There's a lot of people that do podcasts, but you're going to want to look for ones that are offering education versus trying to sell you something. Yeah. And that's why I agree to come to events like this, because I want to talk to people and give them, the comfort level to at least start educating themselves to go to the next level.
And again, full disclosure, unlike a lot of different programs, I don't charge anything for people to come on my podcast. I don't know if that's a surprise or not, Trevor, but I don't pay anything for it. And I don't get anything out of it. I don't get commissions, affiliate income. That's not to say I have not had vendors where I disclose an affiliate relationship that I'm working with. I have nothing to do with Trevor's company or the other companies I've invested with. And to be honest, for those of you listening, if you really want me to be honest with you, part of why I have this podcast, invite people, is to vet them. Would I invest with a company or not myself? And so one way I can say the only people I've ever invested with, among other steps, I had them as guests in my program because I could ask them questions and see how they act in public and see how they commit to helping people. Because at the end of the day, if they're not going to give you anything, they're not going to earn anything in the long run. They're going to take from you. I think that's my experience. So you mentioned, and I put your link tree in there so people want to catch you on your YouTube channel can go there as well. Is there a particular, so you gave us a book, is there a particular podcast, and I'm going to put your YouTube channel in as well. Is there a particular podcast besides yours you recommend?
So I really like, there's a one called by Gary Lipsky. His company is called Break-of-Day Capital. And he talks a lot about apartment buildings and managing apartment buildings. And that's where I got a lot of my education, because I wanted to be on the active side and I wanted to know how do I manage these deals to get great returns for my investors. James Kamasami also has an excellent YouTube channel where he produces a lot of information. And a lot of it has to do with what are you interested in, right? So there are definitely lawyers that have a lot of talk about the legalities of investing. There's a lot of syndicators that will talk about their deals or about their asset classes that they're, educating the public on. And then there are others that are just, like me, they're offering all kinds. I mean, you could go to a webinar 10 times at night and, listen to people talk about different subjects. And there's also definitely meetup groups. So there's some great meetup groups in your area, and I don't know how far out your reach is, but you're going to want to try to find a real estate meetup, because again, those meetups are all based on connecting with people to learn about real estate investing, and nothing better than to meet somebody, shake a hand, and get to know them better. And again, I run a meetup here in Austin, and the whole purpose is educating. But at the end of the day, I want to educate people, and I do hope they'll invest with me, but I don't educate them and say that's all you can do, right? It's not like it's exclusivity thing. I really just want them to learn about real estate investing.
Well, a couple great things you just said there. And let me recap. He's in Austin, Texas. So obviously look up his meetup if you're in Austin or the greater Austin area. Y'all drive a little further when you live in Texas than when you live in California, where it takes us an hour to go from the west of the 405 to the east of the 405. This podcast is the official podcast for the LA County Real Estate Investors Association. We meet in person on the second Thursday of the month in West Los Angeles. Now, we won't be meeting this month. Notes just went out because we're hosted at the Iman Center, which is a Muslim cultural center, and they're going to be closed for the month of Ramadan. So we will be on the second Wednesday of the month. They'll be in Ventura. I think, I'm not sure if that's been canceled or not, but I know that for sure we'll be back in May, and it will be the next meeting. And we get about 250 people, a speaker, and then there's a vendor roundtable. In fact, I'm always there as a vendor. I was disappointed when I realized that I couldn't go to the event next Thursday because it's the Jewish holiday of Passover, I should say, in 2 Thursdays. But they canceled it anyhow, so it worked out fine for me. But the second Thursday of the month in May and June and so on is our official meetup. And the goal here of this call, you have the monthly meetup in person. We get here weekly. We hopefully bring in somebody like Trevor to educate as well. You should be meeting people and learning on your own, not buying a program from me or anybody else in particular. I'm not selling any program, by the way. I'm just a real estate broker. So, Trevor, thank you so much. So you gave us a good book to follow up on, a couple of podcasts. Let's talk about now, if you want to go to the next level, and let's say that you've been in real estate and you've maybe invested in properties, maybe you've been a past investor, and you want to start raising capital to be maybe an associate or partner into a company. Describe that journey for yourself. How did you go from being a guy who was just investing your own money in other people's projects to representing projects and raising capital?
Yeah, so I started out my first one. I was a small piece of somebody else's deal. So they brought me into the deal, and on that particular deal, my function was to raise money. There are a lot of rules and regulations about raising money, so you need to make sure that you're following those rules. And the main rule is that you have to have an active position within the general partner team. That active position can be doing, many things: investor relations, going on calls. I've done research and different things. And then I escalated to the next one where it was myself and a couple of other people. We got together, we bought a property in San Antonio, and then we actually brought people into our deal to help us raise the money and get the deal closed. So again, it was all done through networking though, through meeting people at various meetups. I go to a lot of national meetups and you do it. And for a book recommendation on that, there's a guy named Joe Fairless, and he did the best syndication book ever. He also has a huge conference. I was just at it a couple of weeks ago, 1,100 people in Salt Lake City, all talking real estate syndication. It's a great place to learn because they're not really selling you anything. They're just educating you. And that's rare. A lot of these conferences are 90% selling you something and 10% educating you.
Yeah. So let's see, the one you just mentioned, Joe Fairless, is it Simple Passive Cash Flow?
No, Best Ever Real Estate Syndication.
Best Ever Real Estate Syndication.
Let's see
Salt Lake City?
That's where the conference was, yes. But there's a book as well that he wrote, and he also has one of the longest running real estate podcasts.
Very nice. Okay, there you go. Best Ever Apartment Syndication book. Is that the one you're?
Apartment word.
Got it. Okay, good. So I'll go ahead and put that in the link as well, just so we can.
Yeah, and it's a great book, and it basically tells you the sort of A to Z of, okay, now I want to become an active syndicator. What do I do? And it goes through everything from finding a deal. How do you find partners? How do you raise money? And again, it's a simple. It's obviously practice is more complicated than in a book. It's a big thing buying, it's a big thing once you reach the level of you're taking somebody else's money and you're responsible for investing it. It's a huge responsibility. And that's why you want to make sure you have the right person.
So the process of going from this, now we talked about starting as an investor and you do your research and find people and follow them. And there's a lot of work involved. You can invest money or time. And I feel like if you just shortcut it and pay somebody to learn, you don't learn yourself. That's not the right way to go about it. Better to invest time by learning. And we talk about that. If you want to syndicate yourself, I think your answer was, we'll start with a small piece and learn the process bit by bit and grow into that. And that took time. Describe from the time you started investing until the time you became raising funds as a business. What was that time period like for you?
Well, see, for me, it was about 3 years, but for everyone else, it's somewhat different, right? Again, I ended up losing my job during COVID because I was in a business that, really got hurt a lot by COVID. And so I think I might still be working today if that didn't happen.
Right.
And so I might not be as active as I am now. Because so there's still a great advantage in just passively investing.
Right.
Active investing, again, it's a lot of work. It's a lot of responsibility. I do it full time, and all the people on my team do it full time. And we spend a lot of energy on it. But so it really just depends what you want to do. But the best way to do it is to get in with a group of people, start connecting with a group of people, and you can meet them at a mentorship program, at a meetup, get to know them, and then you start out in the deal with a smaller role. And the smaller role, the easiest smaller role is often to bring other people's money to the deal. And there's a ton of rules around that. So just make sure you understand your rules. You don't want to, because you're basically selling unregistered securities. So you have to make sure you follow the correct rules. But when you do, it's a very good, and I ended up, just for example, my first deal in South Carolina, I own 3% of 30%, if that makes sense, because the partners own 30% of the deal. So it's not like I have a big piece of the deal, but it was my first time to switch over to that.
Right.
And you make some money basically for your time and energy.
Right. So that's what you did when you raised money for somebody else's project. You got that as your compensation, was a piece that you trade your time for an asset, which was your interest in the property.
That's correct. And then when you normally get an asset, so how it works is the $1 gets earned, 70 cents normally goes to the investors, and 30% goes to the sponsors. So I'm 3% of the 30%. And in theory, I still invested as a passive, by the way. It's very important to make sure that you're with people that are putting their own money, their own skin in the game. So I've always put my own cash as a limited partner in a deal. Because I think you should put your money where your mouth is, and invest along with your investors. So that's another question you always want to ask people. Do you have your own money in the deal? You want people that have their money in the deal.
Yeah, and I think that also there's a certain scale to it that, theoretically, when you find somebody a great deal, you can try to raise $1 million, $2 million with none of your own money, or a small amount of your own money. My experience is that person is not going to treat your time with the effort that you think is worth. But when you come to them and say, yeah, we're raising money in 50,000 chunks or $100,000 chunks, and I have 50,000 in the deal, you're more as a colleague or as an equivalent. Maybe you're asking them or offering them to put more in than you are, but at least you have some money, right? Yeah, I think that makes sense. Okay, good. So look, hey, this is meant to be participative. If you have any questions at all, love to have you. Tobin, I don't know what you're doing. I don't know who you are, but we're going to remove you from the call because I just know where we're headed here. For some reason, I've been getting these Zoom bombers weekly, and it's just been a game of cat and mouse. So we're going to not play that one this week, and he can go somewhere else. I didn't just fall off a cabbage truck last week. I am paying attention here. So, but it is meant to be participative. So if you're registered and I know who you are, if your video's on, if you're playing along, love to have you participate. If you're watching this on the live stream, we're on YouTube and Facebook. I see people right now. If you put questions in the chat box now, I'll be able to respond to them. If you're watching a recording, I'll circle back afterwards and if appropriate, forward Trevor or answer for you if I can do that as well. So feel free to raise your hands and learn. I know the best way to learn is by asking questions, participating actively rather than just sitting and listening. And I always say to people, if my podcast was so good that people just watch them recording, I would just record them, put them on the internet, and would spend the time I do on this. But I do this because I know that the best way I can help people, I get asked really every day. How do I get started? And I tell them, I know how I got started. I don't necessarily know how to get started. I can point you in these directions, and you got to do the work and find your own path. So that's what we're here for, is to help you find your own path. Okay, so we talked a little bit about the mechanics of passive investing. We talked a little bit about the mechanics of moving to become a more active investor. Let's talk about the mindset, because at some point, you took responsibility for your own investments. Most people don't. You took responsibility later for your own income. Most people, you were working for the man before that stopped. At some point, you decided to go out on your own. Tell me about the mindset shift from relying on other people for the income and the returns to take responsibility to do it on your own.
Yeah, it's interesting that in theory, our world, our generation, whatever it is, teaches us, certain things. Okay, get a job, do a 401k, invest in your 401k. But at the end of the day, nobody really tells you that is the highest fee charged investment you will ever make in your life. Those things are feed to death by the administrator. And you also have no control, and you're basically, whether they make money or lose money, the people that hold those investments, they make money. And I've never liked that situation. So once I finally got the mind shift that was not the right way to do things, what I needed to do is I needed to take charge. I really wanted to invest in real hard assets. So mostly I do apartments, but I've done other types of investments where I can see an apartment. I know if we buy this apartment, we make it a better place to live and fix it up, we can charge more rents. And then the beautiful thing of real estate, of course, is its huge tax advantages. You get all types. First of all, it all comes back to you as capital gains. Secondly, there's a lot of depreciation and other things. So even if you have a W-2 job, you can almost earn all of your passive income tax-free. We all know the former president who said, he pays no income taxes, and he does it because of real estate.
Right.
He understands how to play the game. And so the government is incentivized. And I just never knew that. I had no idea. I had no idea I could take some old retirement funds and convert them out of a place where I knew nothing what was happening and put them into a self-directed IRA and invest through them. I just, so I was afraid of it and then once I got my eyes opened, I thought, oh man, I got to get other people's eyes open, which is why I agree to, spend a lot of energy doing this. But it's nerve-wracking. The first time I made an investment, I was like, I can't believe I just sent these people $100,000. I can't believe it. And then once I started getting updates and I started getting some cash flow and I started seeing the improvements of the property, and actually they were in Texas, so I could go visit them. And I got more and more, right? So it's a real building. Things happen, right? You're buying a real asset, and we all know that real estate appreciates over time. And then on these types of things, you force the appreciation by making them better because they sell on a multiple of their income.
But you explained to me just now, and I appreciate that, a lot of good logical reasons to do what you did. But at some point, you didn't believe all this. Yeah. And to make this change, I know you said in your story you were kind of forced into it to some degree, but you could have been a victim. You could have let it overwhelm you, but you took the initiative to learn about this opportunity or these opportunities. What was it that helped you through that transition?
I think it was just education, being educated to the real values. And another book we didn't mention that everybody should read is Rich Dad, Poor Dad.
Definitely.
The fact that, we're all told that our house is an asset and reality, and all of the quadrants of earning money. I read the book, but it didn't sink into my thick head. And then once I really started to understand that the quadrant of investor is the most powerful quadrant, and then real estate is the most powerful vehicle within that quadrant, it took me a while to finally kind of wake up and get that. And so, I highly recommend people to listen to that book. And you have to change your mindset. You have to change from, what Wall Street tells you, what the 401k people tell you, even your employer tells you.
Right.
And Robert Kiyosaki doesn't just talk about real estate investing. It's a huge part of it, but he talks about, also the business side of it, things. And, there's lots of different ways.
I think Rich Dad Poor Dad is the book that takes people from caterpillars to butterflies, right? You're either trapped in the system, and I'm not saying as a result of my career, I've become, Robert Kiyosaki or a multi-billionaire. But at a minimum, at least you know what the game is. You can play it. And it's a tough game. You got to work hard at it. But at least you know there's a game. And what you also know is the people who are just working for a living and putting money in retirement really are just suckers. And I've been played for a sucker most of my adult life, and I've been trying to make up for it since. So Rich Dad Poor Dad is a great resource that I'd recommend strongly, along with Trevor, both his podcast, his book, his whole network. Another one is Grant Cardone. There's another one, I think, who challenges you to take responsibility for your life financially. Yeah. You may or may not like some of the things about him. He has a style, and I was put off by it for a while and have come to really accept it. But more importantly is to take responsibility that either you're going to be in charge of it, or you're going to let somebody else be in charge of you, and you're not going to like the results if they're in charge of you. It's just, there's just nothing good about that comes about. So good. So Rich Dad Poor Dad, I think, is definitely one of my, it's just the starting point for everything investing in real estate that I've experienced. Hey, I see.
Another big mind shift too is the fact that, I spent my whole life trading time for money. And then, when you think about it, that I never put my money to work. My money never went to work. I earned my money and I spent my money, and I paid, the highest tax brackets, all of the different things. And, the great Warren Buffett says, if you don't find a way to make money in your sleep, you will work till you die. And again, took a while for that thing to sink in. And that's why I say it every podcast, every time I can, because once that's sunk in, right, my money needs to go to work for me,
right?
Not me just going to work for my money. And until you do that, you are 100% dependent on your ability to go to work and earn money.
Right.
You'll never reach financial freedom.
Right.
And we all know, there's not going to be enough Social Security left or whatever it is. You need other resources to be able to have some sort of freedom.
I think the other part is, Warren Buffett said that, yet it looks like he's still working, right?
Yeah.
How do you resolve that? And the answer is, when you have the freedom to not work, then you have the freedom to do for work what you love to do. He loves stocks, investing, teaching people, whatever you want to call what he does. He's adored. He's a god to some people. I can't say I'm at his level, but I enjoy real estate. I enjoy doing this. And one of the things I can say to people is I run the business the way I want to do it now. I make enough money and I've made enough where I can have some freedom. I still want more. My life will be dramatically improved the more I make in these crucial years of my life. But that said, I don't have to do anything to pay my bills anymore. I'm past that stage. And that's a real relief. It allows me to make choices that are in the long run rather than the short run, that I can say I'm building something for the long run rather than I have to get paid the commission this month or else I'm going to be out of business, and therefore forces me to compromise my standards, my values. I'm not going to do that. So, okay.
Freedom means something different, right? I mean, he's an elderly gentleman, and but his freedom is he loves what he does.
Yeah.
He loves it, and he can do anything he wants, and he's not sitting on a beach drinking pina coladas. It's just not him. And, that's freedom, right? Freedom means that you get to do what you want versus you have to do something to be able to earn a living.
I just say on a personal level, my wife and I were talking, and we went to do a vacation with my married daughter and son-in-law, and we have one grandson, and we think we'll have a second one here, expecting in August. So we're thinking December, we're going to go for vacation, take them with us somewhere. And that's been my why, has been to be able to pay for vacation and take my grandchildren and my daughter and son-in-law. In this case, she wants to go to Florida. The truth is, for me, going away for a week, just sounds boring. But she knows me by now that my job, because it's the week that she wants to go, is to find a real estate conference. We're going to go in South Florida near Miami. Find some conference near there so I can justify my head. I'm going, but I'm meeting people. I'm engaged. They can be at the pool all day. I'll get an hour of a pool time daily or something. But for me, that's more enjoyable. I'd rather learn and meet people and participate in what I do. I don't have to, but for me, that's more pleasant than going on a tour. It's it doesn't do anything for me. And I have to be careful because it's not all about me. I have to entertain my wife and make sure he's happy and stuff. So Mark points out the Rich Dad Party is also available at local library. Thank you. It is. And here in LA, for sure, you can rent almost any book in audio form, DVDs and such. Even online, you can download MP3 versions of Rich Dad, Poor Dad. And what I also find amazing is there are books now, they're classics that you can even get online in PDF form, like Richest Man of Babylon's free. Or on YouTube, there are people who've audio recorded Rich Dad, Poor Dad, or almost any great book, and you can listen to the audio on YouTube basically for free. All Tony Robbins books are there, and a lot of Robert Kiyosaki's books are there. So we live in an age where the information is right in front of you. All you have to do is make the decision. And I think what Trevor tells us, at some point, he was forced to make that decision at some level. And it worked out. You can wait till you're forced, or you can get on your own and get into action. But thank you, Mark, for pointing out those opportunities. On the YouTube, we got a comment from Frederick, who says he's in Fresno. We mentioned how you should be looking for local meetups and such. And Frederick, what I would say to you is, I don't know any meetups, particularly personally in Fresno. Two great places you might look for real estate meetups. I would go to eventbrite.com. Eventbrite.com. And another one I would go to is meetup.com. And both those are platforms where hosts of events will go in and post their events and ticket their events. There's a lot of free events there as well. So I would search for sure eventbrite.com and meetup.com and put in your Fresno and real estate and see what's available. I check probably once a month for new events, either online or here local for me. I don't go to as many locally now just because of the way my business is, but those are two great resources. Trevor, any other suggestions of where somebody could find good meetups in Fresno, California?
I don't know, sorry, but those two places are the best. If there is an in-person one, there's there.
Yeah.
And then, if you connect with just a few real estate groups, again, I have a meetup every Wednesday through Massive Capital, and I promote it on my Facebook and my LinkedIn, and we again do our webinars for educational purposes. And there's lots of other people like me that have events that have educational formats to them, and then you'll just start connecting with people. And a lot of these meetups, you can put your information in the chat and connect with people. I mean, right. I've connected with so many people that I've never met in person on all these Zoom events now.
Well, you remind me of two great things. Number one, his massive.capital webinar is massive.capital/webinar. Put that in the chat box. Great place to go. And I would say, who was it? Frederick, if you go to enough online events and ask the question, who's in Fresno, you'll find that's a good way to meet people and flesh them out locally, number one. And number two, on this call, put in your information. If you're looking, number one, put your contact info, your name, phone number, email, and what are you looking for and what do you bring to the business? I mean, I think oftentimes people will pitch what they want to get from, they're selling something, but what value do you create for people who want to work with you? Classically, lenders will talk about all the programs they have, but I think I would rather talk about people helping them find financing solutions to tough loans or helping them get prepared to be financeable in order for their first investment. I would offer that. So again, if you're on this call, whether you're on live in the Zoom, for sure, your contact info, what you're looking for, and then what you bring to the party, put that in the chat box. And as well, if you're watching this on the YouTube or Facebook or LinkedIn live streams, put the information there and we'll get a chance to connect that way. Okay, so your webinar is a great one, Eventbrite, Meetup. Any other sources that one or two other places you might recommend for people to look for?
If you just start connecting with people that are in real estate, all through LinkedIn and Facebook, everybody's sharing their events and other people's events. That's where I found them. I just, you make a couple of connections on Facebook or LinkedIn, and next thing you know, you're inundated. And like I said, I could go to 10 meetups every night. Online if I wanted to. And I still every night I'm on at least 1 to 2 still.
I often have said to myself, I need to make a list of all the different meetups and make it available for people. I just never taken the time to do that, but that'd be a fun. All the real estate ones that I find interesting that I go to. I think maybe I just feel guilty. I don't go to as many of them as maybe I should. But definitely, I would say you go to one and try to find two more leads while you're there. Two more places you can go. Put out that you're looking for meetups. People will promote their own program when you're there online. And then while you're online, look for local ones, I think is the best opportunity for everybody. Okay, so I think we're caught up with questions. Redmond Capital. Thank you, Matt, for putting your information in. I appreciate that. Redmond Capital. I know that name from somewhere.
Yeah,
Have we
Matt
met
and I
before?
met it first time we met in person at Best Ever a couple of weeks ago. We'd seen each other on Meetup. I didn't even know he was coming tonight. We've seen each other dozens of times, and we actually got to shake hands, which was so nice.
It's funny. You meet somebody online. Next thing you know, you're following them all around because you find you have similar interests and similar people that you meet. So good. Well, Matt, thank you for sharing that. Again, anybody else, feel free to put in your contact info in the chat box, and then as well, if you're watching on the live stream, love to have you participate there. Okay, so tell me, obviously we live. I'm like you. I'm not a teenager anymore. Been around for a while. I've seen a thing or two. I have seen, and I'm a historian. I really enjoy learning history. I particularly like American history, Revolutionary War, Civil War, World War II in particular. We're living in times of just completely not only uncharted, but I think we've seen more history-breaking events in the last 3 or 4 years than any time in history. And as a result, I think there's two things I've noticed: are people are very tense and stressed, and there's a lot of fear.
Yes.
And at the same time, there's never been a greater opportunity because if you can negotiate that, the people who are, and I feel like I've been able to at some level negotiate that. That's why I've been able to build my business and be successful. What do you see happening now? What do you see happening in the short run? And how are you preparing for perhaps the uncertainties or the stress that you see in the marketplace?
Yeah. So for me, I believe there's going to be a lot more buying opportunities. It was a seller's market for a long time, and they dictated price, they dictated terms. People were chasing it all the way down. And don't get me wrong, it was a glorious, like the last, 5 to 10 years were a glorious time to make some good money in real estate. Now being a good operator is going to be more important, but even being a good operator, if you got into bad debt, and you didn't buy like a cap rate to protect your interest rates or your loans, and you were in a flexible loan. So what I think is going to happen is there's going to be properties that are profitable, but aren't making money because of the new interest rates. And if you could refinance them with a new group of investors, you could pre-plan for that, right? So it's all about pre-planning. Also, so many deals right now, like the last couple we've closed, we're doing a loan assumption. So we're actually assuming somebody else's loan. And so we're assuming at a lower interest rate. It's still got a fixed debt, because fixed debt was something that was very prevalent, the last 5 years. Fixed debt was super prevalent. And then everything started to go, everybody went to bridge loans because they were getting such a huge loan to value, but they were flexible rates. And then of course, everybody got caught, the tide went out and everybody got caught. And, even personally, I'm in a couple of deals as a passive investor where, they're a bit of a struggle till it catches up. And never, ever in the history of mankind have we gone, let's say 4 or 5 is a normal, 6 is a normal interest rate. We went all the way down to 2, 3, and then all the way up to 7, 8 in like 6 months, just unheard of.
Right.
And, I was surprised to see they did the last rate increase. I'm not an economist, but I was somewhat surprised. I thought, even the small bank thing would have maybe jostled them a little bit, but it didn't stray them off their course. But they're still saying they are going to normalize and come down, right? So even though they're raising them now, they are. And I don't know if we'll ever see the 2, 3s again, for a very long time. But deals still work at the regular, I'm old enough to remember my house mortgage at 17% interest. I don't want to do it again, but I was, we had it. And, we all live. And this is a different crisis than the 2008, right? Banks are still stable. Everything is still stable. Yes, there's been some issues, but it's a different kind of crisis. And to be honest, it's one that's created by, the excessive printing of money and the excessive doling out of cash, without effort necessarily. There was a lot of bailout programs that happened, and that spurred a lot of instability.
Matt, thank you for reminding me. I did meet you today on Dan's Zoom. You're right, this morning. Flynard asks a great question, and I think this speaks what you just talked about. He says he has a 2.5% rate. Would it be wise to refi with a lot of equity in the property? The difference between rates on some loans, you talked about assuming a loan, meaning a loan on the books on a property may be at 2.5% or 3% versus the market rate could be 6% or higher. With our Fannie Mae mortgages done on apartment buildings at 2.5% or 3%, if you can assume that loan, that differential of 3%, that alone is a great rate of return. Like if you just broke even on the rest of the deal, but you had a 3% guaranteed rate of return on something with good equity in it, that's a great investment. And I think that there's historic opportunities, certainly in the residential market, for buying properties subject to lower rate mortgages. There's never been as many opportunities for that to take place. It's not happening in record numbers yet, but I believe that's going to happen here as people learn how to do that. And I imagine that's going to trickle into multifamily and commercial as well, is more people are looking at how do you market a mortgage that's such a great deal that the property may not be so good, but the financing's so good that you want to take it over and build on that. I don't know the answer to that, but there are very smart people who see those opportunities and they're making a fortune just in that alone, I think.
Yeah. Yeah. And everybody's situation, there's not one answer that's correct, right? It really depends. And again, if you could get $500,000 out of your house and double that in 5 years, and it was only, you could get a 5% interest rate for that, you're way ahead. But
also like in Flynard's case, with a low rate like that, and you talk about would be wise to refinance, it might be wise to bring in some equity partners in the deal or some subordinate financing to keep that loan. It all depends on the math. But to give up a rate at 2.5% right now, you for that amount of money that you have the loan on, it's going to be very difficult to earn money that will overcome that unless it's a very small loan compared to the equity. And again, I think there are people who would buy the equity. There's ways to share in that. And I would do my best to try to find a way to keep a loan. And then, of course, the question is, what would you do with the cash after refinancing? That's the problem, right? If you had $2 million, out of a refinance, what are you going to do with it? You're going to buy real estate today, tough margins. Everything's kind of compressed. You're going to buy stock with it today. I mean, I own a lot of stock and bonds, but there's nothing I'm really proud of. There's nothing I'm jumping to buy today. I have my money there for long-term investment. But so that's the challenge is, and Flynn says buy land. Well, okay, that's an easy answer on one hand, but it's a little harder to prove that you're going to buy land and make money. I think in the long run, land can be worth a lot, but you got to buy the right land, not the wrong land, or else you're going to end up in a difficult position. That's why historically land's been speculative.
Yeah.
Hey, shout out to Casey Eberhard, who's watching on the YouTube. Thanks so much for jumping in. Casey runs Networking Riches and Platinum Emerald Circle. He's has an amazing real estate background, and he teaches primarily, I think, networking, how to build your network, whether it be selling real estate or selling to real estate investors. And he has a meetup. He's actually formed one in the San Fernando Valley. I think it's monthly in North Hollywood. And so if you're interested in the details on that, reach out to me. I'm glad to help with that. Okay. Influences for farming. Farmland, all I keep hearing about is Bill Gates buying farmland. The Chinese are buying farmland. We're not growing any more farmland. That's for sure in America. So to me, it seems, how do you comp it? How do you know what a good price is for farmland? I don't have that expertise, but if you do, I would think that would be a great opportunity for business. Okay, so I think we've kind of covered most of it. I don't see more questions. Trevor, I think I really appreciate you walking through, and just a quick recap of where to reach you at. You have a link tree that has kind of like everything Trevor Thompson you ever wanted, and and more, I guess, to some people. And that's at a link tr.e/ and then K Trevor Thompson. I put that in the chat box as well. And that has most of the places to find you at. And then you also are involved with a massive Capital webinar. When is that? That's on the 29th. So that's what
Wednesday. We have a webinar every Wednesday.
And what time is that at?
It's at 6 p.m. Central.
Got it. So 6 p.m. Central, which would be 4 p.m. here in Los Angeles. So you can meet up with them there, and you'll see him at various meetups. I just want to thank you so much for being on the call today and sharing your expertise, your experience, and your strength in what you've done so far. I think hope for other people as well and what they can do as well. So Trevor, thank you so much for being on our call today.
Oh, it's my pleasure. It's so great to be here. Thanks for having me.
Thank you. And for the rest of you, just want to thank you for being on the call today. We do this every Tuesday at 3 p.m. Pacific, 6 p.m. Eastern. We live stream it on Facebook, YouTube, and LinkedIn. This is the official podcast of the LA County Real Estate Investors Association, where we meet every second Thursday of the month. Now, we're not going to be in April due to conflict scheduling. We're going to meet again in May, the second Thursday of May. And then also Lloyd, the proprietor, Lloyd Siegel, has a basic boot camp. Great program, 1 day, catch so much. If you're looking to get started in real estate, I think for the value is $149 if you do it before June 17th and $249 thereafter. $149 for really a coverage of such a wide swath of the real estate market. I'm not big on spending money to get started, but I am big on paying for education, books, podcasts, and good meetings that they're worthwhile are worth a fortune too. So feel free to join. I'm Bill Gross. I'm a real estate broker in LA. You can find me on social media at Bill Gross EXP or call or text me. I appreciate being on the call today as always, and make today your best day ever. Thanks so much, everybody.